Once again, hello to everybody. As we promised in the morning, we're coming once again with a reviewing of today's foreign exchange market after the publication of the United States payrolls report. First of all, let's make a quick look through the data. As we can see, everything is very perfect for the American economy. And as we see, the average hourly earnings is higher than expected. The expectation was around 0.2% and the actual number is 0.3%. As well as absolute number is better than expected. 200,000 new non-farm employment jobs and that's comparing to the expectation of 181. And what's interesting also, the last number was revised upwards from 148 to 160. Unemployment rate is stable at 4.1%. All in all, the data are very good must be very good for the United States currency, for the future of United States interest rates, taking into account the result of the last Federal Open Market Committee meeting, where the majority of the members told that they forecast a much better economic situation in the United States, which could also impact the inflation expectations in the United States, and at the same time this process should lead to higher interest rates altogether. So that means that the dollar must go up at the moment. Now let's make a quick look to the current market sentiment. As we see, really the dollar is strong at the moment, and that's to be honest, it's logical, taking into account the data, but let's don't make a kind of fast predictions, fast kind of reaction to the news, because we still consider the current rebound in the dollar's price just only as a correction. Even today, the market may be initially subsided to the lower side, I mean the majors. Anyway, sooner or later, the market should stabilize and the dollar should go lower. Now let's make to our portfolio strategy. And as we can see, we still long euro dollar. Dollar yen we closed at 110.20. At the moment prefer to stand aside. Let's see how the market closed the week, how the market will open on Monday, which will be very important. We still expect lower levels should give us an opportunity to buy cable, but below 141 at first. Also the same applies for the dollar Swiss, so as we still maybe a kind of higher reaction to the upside before selling the currency. We increased our position in the Australian dollar at 79.40, bringing it to the average of 79.75 with a stop below 78.95. We entered a short in dollar Canada at 23.40, maybe a little bit premature kind of step. Let's see the chart in the dollar Canada. At the moment it's around 23.65. We put a stop above the resistance level of 124. We still expect the current rebound is just a correction, and taking into account the strong fundamentals of the Canadian economy and higher expectations of the interest rates or high interest rates by the Bank of Canada, we still expect the dollar Canada sooner or later will continue to go lower from here. All in all, we are short at the moment. In case of breaking above 124, we will resell the pair at 24.90, closer to the moving average 400 hours line, which now intersects around 125.12. Also, what about other currencies? Euro Swiss is around 116.10. We still expect 116.30 to cut the long position with a small profit, and we are long Euro Sterling at average 87.325. And at the moment, this pair is it's developing a kind of performed better than in the morning. For example, it's around 87.90 at the moment. Euro ruble still above 70, which means that next week we should go higher from here. We wish you a nice weekend ahead, a nice closing of the week. Don't hurry up with your positioning. Try to be safe and limited. Maybe it's better to wait for the morning on Monday before make any kind of new considerations and enter the market. See you later. Bye bye for now.